All right. Well, thank you so much for joining us for this webinar on how to analyze growth rates using Koyfin. This is I think webinars are something that we started doing recently. This is the first one we're doing for fundamental investors. We did one previously for financial advisors and how to look at mutual funds. And if you ever have any questions on how to use Koyfin or anything that you have questions about, any sort of functionality or any sort of data series, please write to our help desk, which I read and I see what's going on there, and we'll try and incorporate it into other webinars going forward. So let me just share my screen and kind of go over what we're going to talk about in this webinar. And most of this webinar is going to be a screen share, a demo, but let me just kind of like show you my screen and show you what we're going to talk about here. So a couple of housekeeping items for the webinar. This webinar is being recorded, so you will get an email to the video after the webinar. So don't think you have to take notes and kind of memorize everything, because you'll be able to rewatch the webinar and skip around and fast forward and all the good things that you can do on a recorded video. There will be a Q&A session at the end, so please post your questions in the chat, and then after I'm done with the demo and going over the prepared topics, I'm happy to answer the questions, whatever questions they may be, either about growth rates or about Koyfin or about life or anything that's on your mind. I will try to answer your questions as best that I can. The reference material below this document is going to be available to you as well. So we're going to have a nice little outline that we're going to follow as we think about the webinar and as we think about growth rates. So you'll have access to that document as well in the email. And the last thing I wanted to mention is that if you want to become a Koyfin investor, there's an opportunity to do that. We're currently raising a round. We've set a portion of the round aside for our users. So if you're interested to do that, there'll be a link to join an SPV. It's basically a legal structure where you're going to be part of a legal structure that invests in Koyfin through AngelList, and you'll have more details in the link. To the extent that you want to invest more than $100,000, please email me directly, and I can discuss with you another way to invest in Koyfin. But if you're thinking about investing less than $100,000, then I'll send you a link to this SPV following the call, and you can take a look at it and decide whether that's something you want to do. We have a lot of users who are passionate about the product and want to join us on this kind of startup journey as well. So there's an opportunity to do that currently in our round. So with that, let me kind of get started on the topic here of growth rates. So growth rates are immensely important. It's really what drives stock prices. I'd say a lot of novice investors, when they start looking at stocks, they'll think about stocks and they'll think about fundamentals from an absolute level point of view. So Apple's market cap is $1 billion, Apple's revenue are 500 billion, or Apple's market cap is $1 trillion. Apple's revenue are 500 billion, whatever the actual number is, I'm not sure. But as you spend more time investing, as you spend more time in the business, what you realize is that growth rates are the thing that drives stock prices, because what the market is really, really good at is sniffing out inflection points and really trading the future, which is kind of what growth rates tell you. They're telling you the change in the future or the change that's happening today versus the past. So it's really, really important to understand growth rates. It's really, really important to understand where a stock is in a cycle relative to its history, where a stock is in a cycle or relative to its peers on all these fundamental metrics. And Koyfin has a lot of tools to really do that. And so we'll go over some of those tools in terms of how to look at growth rates, what they mean, how to think about it and stuff like that. I wanted to cover a couple of items in terms of terminology as we're discussing growth rates. So let me actually go to the I'm going to use Micron as my guinea pig today, because I think Micron is really interesting. It's a highly cyclical company, and so growth rates matter a lot there. So I'll show you why and how that looks like. But if we go under analyst estimates to actuals and consensus, this is a snapshot that we released several weeks ago. It's really awesome. It's gotten a lot of good feedback. So if you're not using the snapshot, make sure you take a look at it. But what the snapshot does is not only does it combine the historical figures, it combines the forward figures as well. So I sort of have my historical figures here, my estimated figures here. And what we did is we also combined all the adjusted figures in one space. So before there was kind of this weird disjoined universe where the estimates were on some snapshots for the future, the historical reported were in others. And so what this screen does is it unifies, and so that you're able to look at the sales estimates and look at the sales history in one screen. And more importantly, something that you couldn't do before is look at the adjusted EPS going forward, which are the estimates, and then look at how that compares versus the history going back in time. And that's really, really powerful. Just to remind everyone and go over what is the difference between adjusted and unadjusted. EPS GAAP is what's reported based on accounting standards. So the FASB and some other organizations in the world, they have a definition of how to calculate earnings per share. Investors think that definition is not great. There should be some adjustments, particularly on non-cash items like stock options. So what investors and analysts typically do is that they typically add back those items or add back those expenses. And typically the EPS adjusted figure is higher than the EPS GAAP figure. There's a debate in the investor community, which one's more important. I would say just make sure you understand what each one means, and you could figure out what's more important. EPS adjusted is definitely more quoted or definitely more used by the analyst community. So when Goldman Sachs says Micron's going to earn 36 cents a share, whatever it is in 2023, 2024 is going to earn $4.02. Those are adjusted numbers. So they'll make some adjustments. And in here in the settings tab, you could actually show the estimates data, the additional estimates data. And even though we don't have it broken out by bank, we will show you kind of like what the average, median, high, low is. So this gives you a sense of the distribution of the estimate as well, which might be helpful, but that's a lot of details, so you could always hide it. And so what this means. So just to kind of recap, adjusted versus unadjusted shows you the kind of what analysts use versus what the GAAP numbers are, and it's really, really important to understand those and understand the differences. And we have those both in the actual versus consensus tab in Koyfin. We also have a lot of other kind of estimates now: cash flow, return on equity, margins, growth rates here. A lot of people use gross profit as a really popular metric. So this is a really, really good snapshot, actuals versus consensus, and you could get a sense of kind of what that looks like. So in here, that's kind of like item number one. On item number two, growth rates, there's kind of, I'd say, different dimensions of growth rates that we think about in Koyfin, just so you know the terminology. So there's the historical year-on-year growth rate, okay? And so that means that year-on-year, if I have annual selected, I would look at the year-on-year change here, or the year-on-year change here, or the year-on-year change here. And so that would be the year-on-year change. There's another way to look at historical growth rate, which is called the CAGR. So instead of just looking at the 1-year growth rate, I actually want to know what the 3-year growth rate is. I want to know what the 2019 to 2022 growth rate is. And so that's another figure that I'll show you how to look up in Koyfin, but that CAGR growth rate is also important. So maybe you don't want to look at the 1-year growth rate, you want to look at the 4-year growth rate. And what CAGR does is it calculates the annualized growth rate. So it basically looks at if you were to grow at one rate, so basically how much did the company go from here to here if you assume the company grew an equal amount every single year. So it normalizes that growth rate per year. So it's not the total growth in these sales from 23 to 30, it's the annualized growth rate from year to year. And the 1-year CAGR equals the year-on-year growth rate. So 1-year CAGR will always equal the year-on-year growth rate. And then the same thing you could do for kind of the forward growth rates, right? So if I'm looking at the forward growth rates for Micron in 2023, it's expected to be down 37% on a sales basis. And then I can also think about the CAGR for the forward growth rate. So I could think about actually the CAGR from 2022, which is the actual, to 2025, which is going to be the 3-year CAGR, 1, 2, 3. So that could be another way to look at the growth. There is not just a forward growth rate, not just, hey, what is the growth rate for 2025, which is 10.2%. It's actually what is the CAGR from 2022 or to 2025, which we call the 3-year CAGR. And so that's important to understand. The other thing to understand is with growth rates, you could have annual, you could be looking at annual numbers, quarterly numbers, or LTM numbers, which is last 12 months. We actually don't have LTM in this snapshot because we haven't built it yet. But if you look at something like the income statement and you look at the highlights, and let me just put this, this is going to take a second to load just because it's a lot of stuff. But if I do this with fewer years, let's say 2019 to 2022, apply changes here, and then look at the LTM. What this is going to do is for every quarter, it's going to look at the last 12 months up to that quarter. And this next quarter, it's going to look at the last 12 months. And so what that does is it normalizes the quarter so that one quarter isn't cyclically different than another quarter because there's always a 4-quarter look back period. So for example, if you're Apple and you have more sales in the 4th quarter at Christmas, the LTM measure is going to normalize that because it's always going to include 1/4 quarter by definition, because every LTM number is going to include all 4 quarters because it's a 4-quarter look back period. So just remember that when you're looking at growth rates, you could look at forward, backwards, CAGR, year on year, and then there's another dimension called quarterly, yearly, and LTM. So I hope that's not too confusing, but that's sort of the lay of the land. Okay, so let's go back. Let's go now to the kind of like how to look at growth rates and what we would look for in a growth rate. So here I have Micron. I'm just gonna make this template an unsaved template, and I'm gonna start from scratch to kind of like show you what I'm doing. And let's say I want to look at total revenue here for my total revenue, and I'm going to look at it over the past 20 years. So this is my kind of like 20-year revenue. One way that I can look at the growth rate is I can add the total revenue again and look at it here. Obviously, those two are the same series. And then we have a transformation here that instead of looking at the series by itself, which is as reported, you can now transform this series into a growth rate. So that's in the settings tile over here. And what you can do is you can transform this series into a year-on-year percentage change or the value change. I like to look at LTM on a quarterly sequential growth because LTM is already normalized. And this gives you a really nice understanding of what the incremental acceleration or deceleration is of revenue. So we have these two charts. They're not great because they're line charts and they're on the same axis. So what I'm going to do is I'm going to bring this quarter-on-quarter chart down to the next panel by using this little icon, which is going to bring it down here. And these charts are probably better to look at bar charts. So I'm just going to go back to the settings tile and go to the bar chart. And now we're starting to see kind of like some interesting trends going on here, right? So Micron here is this company. We have a 20-year history. We could see from the absolute numbers that it's cyclical. We could see that in June, the LTM number peaked. And this is the first quarter where the LTM growth is down. And so we get a sense of the cyclicality here, and we really get a sense of the cyclicality here. Now, for us as stock pickers or stock analysts, what we want to actually do is think about, well, what are the implications of that? So let me add something like the historical price change as a series, and that's going to go here. And what I'm going to do is I'm going to, again, make it a separate panel, which is this plus view as a new panel. And I'm just going to kind of leave it down here and look at this as a price here. The other thing that you can do is right now you have this kind of like panel with growth rate. What I can do, which is kind of cool, is I can also add statistical bands to this growth rates, right? So I could look at the mean and one standard deviation. That's another setting that we have in the settings bar to look at the statistical bands. And now I could actually see that on average over the past 20 years, Micron has sequentially quarter on quarter increased revenue by about 3.2%. One standard deviation is sort of minus 4%, plus one standard deviation is 11%. But you could see the cyclicality. You could also see the cyclicality as being much more random before, and now it's much more defined. And kind of like your job as a stock picker, as an analyst, is to understand what the hell's going on here. Having followed Micron just a little bit, very casually, I know that the industry has changed a lot since 2003 since 2004. Micron's much less of a commodity product and much more of a value add product. So you could see the revenue kind of used to be confined to this level, and now they really shot up here to $30 billion. You could also see here that the growth, that the peak and values of the growth is much higher now when it's growing. Before it sort of grew only once, 13% in kind of like all these years, and now in the good parts of the cycle, it's growing above 10% for a fairly long time and for a fairly extended time. So this gives you kind of like an interesting perspective. Let me just get rid of total revenue and just show you EBITDA, because it's a little bit more descriptive in terms of the cycle for EBITDA. So EBITDA, earnings before depreciation, taxes, and all the other kind of stuff, a middle of the line item. So I'm going to make this a bar chart as well. So you could see that the EBITDA of Micron is even more cyclical than the revenue because there's a fixed cost structure. And I'm going to do the same thing here by looking at the growth rate and looking at the EBITDA here, and now looking at the quarter on quarter change and making that its own series and making that a bar chart as well. Okay. So now this is my stock price, my EBITDA quarter on quarter change. I'm just going to zoom in a little bit to get rid of this area where EBITDA was negative and didn't really grow. So this gives us a little bit, maybe I'm just going to go, actually, I'm going to get rid of this point because it's really skewing off the scale in 2009. And so here gives you a much better perspective of kind of the cyclicality. And the thing that you can see here pretty clearly is if you think about kind of the growth rate of EBITDA quarter on quarter, when the growth rate is negative is kind of when the stock bottoms, right? So this is what happened in 2012. This is what happened in 2016. This is what happened in 2019. And interestingly, the stock has been selling off since, let's say, it had a double top in around 2022. And the stock has kind of, I'd say, sniffed this out, but this is the first quarter of negative growth. So we could actually see what these labels are by using this label bar. So in here, these are kind of like the lowest points. These are the highest points, and just to kind of like see what they are. So about double-digit growth here, we're growing about -7%. But you can see in the historical context here that Micron is actually, this is now the time to start thinking about buying Micron, because whenever the stock has started to decline sequential in EBITDA, that's actually, that's probably one of the signals of a potential bottom. I think you have to take a view of how negative this is going to get, right? So I don't have that answer. This is something that I don't know. Koyfin, unfortunately, does not predict the future. We have not created that feature yet. But this gives you a really good sense. I'd say, the biggest observation here is you don't want to own the stock when revenue is growing very, very highly. This is a kind of like a time to, if you short stocks, you want to think about shorting it. If you are long only, you definitely want to try and avoid it. But this gives you a really, really good understanding of when to own this cyclical stock. The other thing that you can do to really visualize this is add a series that we have here called, it's not growth. So it's price change, where's forward rolling percent change. So what forward rolling percent change does is it's based on the stock price, and what it does is it looks at every point in time, and at every point in time, it shows you what the forward one year return is, right? So if you think about here, the forward 1 year return was 290%. This is December of 2008, meaning if you bought the stock here, I don't know where it is exactly, and held it for 1 year, you realized a gain of 329%. And so you can see that this is pretty cyclical as well. And if we're to hide this EBITDA, we're to hide this the stock price, and we're just looking, and I'm just going to get rid of all these numbers here to make it a little bit easier to see. You could see here that kind of, these two things are pretty correlated, meaning like if you're thinking about the EBITDA margin and where you are in a cycle, you definitely want to start thinking about kind of this inflection point and buying the stock where the EBITDA is growing the most negative, because that's where you're getting the most positive return. Same thing here towards the end of the cycle. You want to be buying it where the EBITDA growth is negative, where the EBITDA growth is negative, where the EBITDA growth is negative. And conversely, you want to be selling it where the EBITDA growth is most positive, because over the next year, that's typically leading to negative returns. Now, again, I want to highlight, this is a 20-year chart. So even if you know that kind of like, hey, the cycle, like let's say you're in this quarter and EBITDA margins just started going down, you'd still kind of like chop around here because this negative cycle lasted a long time. So I'd say as an analyst, you definitely want to take a view on how long this negative EBITDA growth is going to last. But visualizing this and looking at this visually is a really powerful way to think about a stock and analyze a stock. So let me kind of go through here and make sure that I'm hitting all my points on that I wanted to hit on this outline. So we talked about the G chart. We talked about kind of like the menu, the sales, the EBITDA, the labels, the price change, the CAGR, the adding of the bands. Cool. I think we hit everything in the graph. Just to kind of maybe one thing I didn't go over is where to find these items in the menu. So in the menu for historical growth rates, and by the way, the graph, our graph function can only graph historical growth rates. Right now, we cannot graph forward growth rates or expected growth rates, and that's something that we'll be building out. But right now, the graph is unfortunately shows only historical growth rates. And if just get rid of this, and in here, if you're thinking about the financials, all the financials are here unless you search for them. And any financial that you choose, so like cash flow from operations or whatever, will always have the transformation. So if I have a cash flow from operations number here, I could transform it into a growth rate over it is. The CAGRs, the kind of like if you want to look at the CAGR, are located also in financials, but over here under growth rates CAGR. And then you can pick which CAGR you want. So if I wanted to, let's say, look at EBITDA CAGR over here, I have my choice of looking at 1 year or 2 year or 3 year. And again, you have to choose last 12 months or trailing 12 months, the fiscal quarter to the fiscal year. I'd say that the standard or default is definitely trailing 12 months. So if I wanted to, let's say, look at the 3-year CAGR, I could do that right here. And that would give me my 3-year CAGR. Obviously would also be cyclical, but this is the 3-year CAGR of EBITDA. And if I change this to, let's say, year-on-year growth, right? So this is my EBITDA year-on-year growth. And I change this to 1 year, 1 year CAGR trailing 12 months. These two numbers should give me the same thing. And I hope they do, or else I'm going to be pretty embarrassed. Let me see. Cool. So you can see here that these two graphs are the same. If you're looking at EBITDA LTM year on year, which is this chart, or you're looking at CAGR 1 year trailing 12 months, apologies, this is LTM, TTM, they mean the same thing. These are going to give you the same numbers. So just so you're aware where it is in the menu item, under financials, under CAGRs, and then you could select the CAGRs here. And that's how you work with growth rates and graphs. Okay. Let's move on to kind of the next topic, which is using growth rates in the market scatter plot. And this is a feature that let me just change this to NASDAQ 100 to be lower, easier to load. The market scatter plot is really awesome. What you can do is you can really graph two items, one versus another. So if I wanted to graph market cap versus like, let's say, price change over the past 1 day, this would give me the scatter plot of whatever I want to graph. And I could choose either an index or an ETF or a watch list to kind of display as my universe here. So I could choose one of my watch list or the holdings of an ETF. So let's say I wanted to look at the software ETF. I could do that as well. It's kind of an interesting chart. You have Microsoft here and everyone else here. And then you have the data here, which you can download as a table, which is pretty cool as well. But we are interested in growth rates. So let me kind of like tell you about growth rates. What the market scatter plot can do is it can graph forward growth rates. So we have these forward growth rates, which is pretty cool now in this menu item. And these forward growth rates, what you can do is you can either graph the CAGR, so kind of like the CAGR that we talked about before, or the year-on-year change, which is interesting. You can also graph, by the way, we're not going to cover this a lot in this webinar, but you could also graph the revision. So how much are earnings being revised up or down over the past several months. So for example, if I wanted to look at EPS consensus average percent revision, and I want to look at kind of like, let's say 2 years out, so FY2E, and what the revision has been over the past 3 months, I can look at it here. You're always going to have some things that are outliers, because if you're going from 1 cent to 4 cents, these are going to be really high numbers. But this is a good way to kind of look at where are analysts moving adjusting estimates up or down. So estimate revision is a cool tab. But let me go back to growth rates. And what I can do is I could look at the forward growth here. And what I can do is I could look at the forward growth, let's say on the EPS estimate year-on-year percentage change. And let me look at the first unreported year. And then I'm going to do the same thing here. Forward growth, EPS estimate year-on-year change FY2. Okay. And so what this is telling me is this is the first unreported year growth. So fiscal year 1, this is the second year or fiscal year 2 unreported growth. And this is a really interesting scatter plot, but because what this is actually going to tell me is where are earnings accelerating or decelerating. Right now, because these scales are different, 180 versus 550, you actually don't see that. But if we change that over here to, let's say, 300 minus 100, and change this to 300 minus 100. Okay, now we actually have a linear related scale. And so if you imagine a line here, which we probably should have as a 1-to-1 beta line, anything kind of above the line means it's accelerating. Anything below the line means it's decelerating. And guess what? Most companies are decelerating because last year or the first unreported year, this coming year is much stronger than the following year because the economy is decelerating in general. For tech stocks, EPS is going to be kind of like wacky. So let me actually change this to forward growth total revenue. So revenue estimate year-on-year change. And this is going to be FY1. And I'm going to change this to analyst estimate, forward growth, revenue estimate, FY2. Okay. So this is going to be a little bit more interesting because we're going to, I'd say, see companies that are actually accelerating, right? So Unity Software, their revenue is actually accelerating according to analysts. Elastic, right? Elastic, their revenue is accelerating. So kind of like growing 26% and growing 30% the following year. So really, really interesting kind of like way of identifying where revenue is accelerating or decelerating in the following years. And this is a way to do it. I would say, make sure that you understand that these are just analyst estimates today. So it's important for you to then, one, observe this, and kind of having this data in front of you is super powerful to observe it. But then you have to take a view. You have to take a view on whether it's possible or whether the potential is for more upside or more downside. So for example, this is Riot Blockchain. I don't know Riot Blockchain, so please do not take this as investing advice, but it's a blockchain company. And I would be very suspect if their revenues 2 years out grew more than the revenues 1 year out. I would say that there's a lot of potential for those estimate revisions to come down. On the other hand, there's this company Alteryx that does data visualization for enterprise companies. They actually had a pretty good quarter over here when the stock popped. The stock has since come back. I would be personally looking for this company to revise up their estimates in 2 years out, because I think it's kind of been dead money for a long time. And so this is kind of like a stock that I've been watching and I would watch. And this deceleration that it's growing 55% and expected to grow 20% the following year, I would actually use that as an opportunity to disagree or potentially look at an interesting risk reward versus what analysts are saying. So you can do this again for, we could look at IGV, we could look at the Russell 1000 and kind of like see what it looks like for the Russell 1000. Again, be careful of these outliers because they're going to skew the results. So what I can do here is I can zoom in with my mouse and kind of like see what everything is going on here. And then really understand kind of like what are the outliers here and look for new ideas that way. Okay, so I think, I guess I also, let me cover this in my notes. What I looked at over here just now is forward growth, kind of like where forward growth is inflecting on the upside. What you can also look at is where historically or the recent growth has been accelerating. And the way I would do that is I would look at the revenue growth. So I would go to financials, I would go to income statement, I would go to total revenue, and I would basically compare the growth over the past quarter versus the growth over the past 12 months. And actually, you would do that under CAGR. So it's total revenue CAGR, and then I would look at the 1 quarter CAGR, and then I would do the same thing here under financials, CAGR, total revenue, and then I would look at what it's been over the past 12 months. And again, be careful, 80,000%. This is not very good. So let me just change this to 500%, minus 500%, and then same thing, 500%. So we have that square relationship. And now I get a much better picture for the Russell 1000 of where things are in terms of this line, right? If you think about this like one-to-one line, over here, things are going to be accelerating, right? So if you're growing faster this quarter than you did over the past 12 months, then your growth rate is going to be decelerating. If you're growing this quarter less than the previous 12 months, then your growth is going to be decent. So if this quarter you're growing less, your growth rate is decelerating. So Open Door sells real estate is a good example. They're growing this quarter at 68%. They were growing 300% over the last 12 months. They're decelerating. This company, Warner Brothers looks like their growth is accelerating. This company, Novax, their growth is accelerating. Again, this doesn't mean that you should buy the stock, but this is a good way to kind of maybe think about a screen and think about which companies potentially fall in that screen and which ones you want to start doing research on. So that's kind of about it for the market scatter plot. Please use it. It's a great function, super powerful. Let me move next to the screener. And the screener here is located over here under my screens. Let me just delete this because I was looking at this before. But we released the screener over the summer. It's been one of our most used features. Definitely give it a try. It's really intuitive, and we've gotten a lot of good feedback about it so far. So let me create a new screen looking for tech. Let's see, high growth tech with positive technicals. So what I'm going to do is I'm going to start with the United States and Canada because that's what I want my universe to be. I want only the primary securities and not secondary securities. Typically, you want to leave this on. I get to select my universe. So let me select my sector here, which is going to be information technology. One thing I want to highlight to you, which has nothing to do with this presentation, but make sure you know that you can search the description here. So I can actually search the description here of anything that's an exact phrase in quotes or with a plus sign include or with a minus sign exclude. So let's say I didn't want any companies that had the word semi in it. I would do semi, and that would actually take my matches here, which is 1,600 matches. That does not look like it worked. Let me include companies that have the word semi in it. So that would be kind of matches of descriptions that have the word exact phrase of semi. If I wanted to look at maybe something that has iPhone as a match, then there are 9 matches. But this is a really interesting field for you to play around with to the extent that you want to search company's description. You're looking for something specific that does lithium or something. This is a really good field to play with. Okay, back to our regularly scheduled programming of growth rates. I selected technology. My market cap is more than 50 million. That's sort of a default that we want to keep. Let me select a growth rate, go to analyst estimates, go to forward growth, and then go to revenues, year-on-year change. Let's say FY1 above 10%. So what happens in the screener is you have a minimum and a maximum field. If you leave the maximum blank and we tell you what the maximum is in the universe, this is going to be kind of like and larger. So this is 10% and larger. We have 351 companies. Let me go back here and look at the forward growth. Forward growth, revenue estimate, year-on-year change, FY2, higher than 10 years as well. And then I have 255 matches. So this would give me kind of like this screen, and then I wanted good technicals, right? So let's say I wanted to screen something with pretty high relative strength. Tech stocks are down about 30% year to date. So I would want to look at stocks, and I like using the adjusted price, but I want to look at stocks that are, let's say, are no more than 20% off their high, because that would tell me that they're kind of like on a relative strength basis, they're outperforming. Create screen. And so now this would be my screen. And so it's stocks that are trading at least 20% within their 52-week high. They're growing estimates at least 10%. Sorry, they're growing revenues at least 10% over the next 2 years, according to Wall Street estimates. And the stocks are kind of listed here. So we have, I think, 45 stocks. So this screener is a really good way to find growth companies and to think about growth companies. The other thing that I can do is I can then export this list to a watch list. So I can take this and export this to a watch list. The way I would do that is copy results to watch list. I have it here. I'm going to create this watch list. Boom. And so now, as one of my watch lists, I have high growth tech with positive technicals. Right now, kind of like when I created this watch list, the default view, which is the watch list view here, got set in terms of these columns. So these are predefined columns. And if I wanted to add some of the other columns I had here, I would click the column bar. I would go to forward growth. So forward growth again, and I would go to revenue estimate percent change, FY1, FY2, and I would close this, and I would have these growth rates as well. The other thing that you can do, which is really, really cool, is you can create a custom column, right? So even though I have my FY1, FY2, let's say I really want to find stocks where the growth rate is actually accelerating from FY2 to FY1. So I actually want to find the difference in these two measures. What I do is I go to columns, I go to custom columns and formulas. I say that I want to create a new formula here, right? Create new custom formula. So I click here. It says, give me your labels. So I'd say FY2 minus FY1 growth, right? That's my name. Then I would sort of select the data items I want. And again, I would select the forward growth. I would go here under total revenues. I would select FY1, which is A, and I would do the same thing and select forward growth. And I would select revenue estimate year-on-year change in FY2. And so A is FY1, B is FY2, and now I get to create my formula, which is B minus A. I want to display this as a basis point because I'm subtracting two percentages, which is really a basis point. I create a column. My column is now here in my created columns. I choose it. It gets selected here, and now I have it here in my watch list. So what you can do here is then you can now sort by this column, right? So I right click on here, and now I sort my watch list by this growth rate. So I could see that there's like 5 stocks here that are accelerating, the rest are decelerating. Not a big surprise because that's kind of what's going on in tech. One thing I want to highlight is now that I have this kind of configuration, what I can do is, let's say I wanted to just, I'm just going to adjust this with some, I'm just going to delete some of these numbers, but I'm just going to leave these columns that I added and created, and I'm going to go to views here. And this is currently my watch list view. So what I want to do is I actually want to save this as my views, which are going to be available to me in any watch list, not just this watch list. So I'm going to duplicate this. I'm going to call this my FY2 versus FY1 view. And what happens is now if I'm on this watch list and I want to go to another watch list, let's say I want to go to my SaaS companies, right? These are my SaaS companies. Instead of having the watch list view, I now go to my FY2 versus FY1 view, and I have these growth rates here. So don't forget that you can save these views from the watch list view, which is your local view, to the global view, which is your kind of view available to everything. And that way you can select any watch list. And now I have my SaaS companies, and now I could see the acceleration here, right? So I have 6 companies. Again, not a lot of SaaS companies are accelerating next year. Zoom being one of them, Shopify being one of them. So that's kind of interesting. I can also look at this for the S&P 500 sector, right? So I have my S&P 500 stocks here somewhere, SPY, and these are my S&P 500 stocks. The way I got the S&P 500 stocks, by the way, real quick trick is I did SPY, I went to Snapshot, I went to Holdings, I went to download Holdings here. Right here, download Holdings. What this does is download this to CSV. I then copied those tickers. I went into my watch list. I clicked create new. I typed in SPY2 because I already have an SPY, add ticker, import securities, and pasted those securities, the tickers that I downloaded, into here. And then it just imports the entire SPY. So that's how you get the SPY. Let me just go back to SPY here, SPY. And let me load that view that I created, right? My view called FY2 versus FY1. And now I actually have all the stocks in the SPY that are accelerating, right? So this is a much more interesting list because it's not only tech companies, there's financials, there's utilities. So it gives me a lot more sense of companies where FY2 is starting to accelerate. And you could do this for FY3. These custom columns, you can sort of play around with them with subtracting CAGRs, like forward CAGRs or backwards CAGRs. So a lot of stuff that you could do with these custom columns in order to be able to sort the list and kind of like see what's going on with these growth rates. So I think those are my prepared remarks. So kind of like screener, watch list, that's it. So that was the stuff that I wanted to talk about. Let me pause there and see if you have any questions. If you do, just hit your Q&A button in your Zoom, and we'll be able to answer some of your questions. Leo asks, hi, am I too late? I don't think so. I think you were right on time. So let me dismiss this. Cool. Jonas asks, Koyfin is an amazing platform. My only request for now would be to have delayed, delayed prices for international stocks. Thank you, Jonas. Yes, we have end of day prices for stocks outside the US and Canada. I know this is something that is disappointing for some of our international folks who need delayed prices. All I can tell you is that it's something that we'll get at some point soon. It's something that's on our roadmap. It's a pretty big technical lift. It's also pretty expensive to get all global prices, but we will get that. And thank you for your suggestion. I would suggest if you go to feedback on the top right of Koyfin, you'd be able to upvote that feature, and that way it would prioritize it for our product team. So thank you for that. Demeter asks, what are these growth rates based on? How many analysts, which provider? So our consensus data is based on, we get from Capital IQ. So Capital IQ is one of the biggest kind of firms. They get their own consensus number. So every sort of large firm has a consensus number, and most times those numbers are very similar. So Bloomberg will have a consensus number, Reuters will have a consensus number. FactSet will have a consensus number, and Capital IQ will have a consensus number. I'd say for 99% of cases, those consensus numbers are going to be the same. These firms have, these financial data firms have different methodologies of kicking out outliers. So I would say any difference would be because of outliers. But if you ask what makes up these growth rates, if you again go to Micron and you go to the earnings under analyst estimates, actuals versus consensus, we do allow you to kind of create this, hit this button in terms of additional estimate data. If you show this additional estimate data, you'll be able to see the high, the low, the average, the median, and the number of analyst estimates, right? So for Micron, if you're relying on 2027 estimates, just know there's one analyst giving those estimates. If you're relying on 2025, there's 11. So typically, Wall Street analysts will give kind of the next several years. As you get further and further out, it'll be even less. So like, let's say for Apple, I go to Apple and I go to 2032. Let me just start in 2021, just because I want to load it pretty fast. We do have 2032 estimates, right? But just be aware that there's only one person who's providing those estimates. So take that with a grain of salt. Hope that answers your question. Jonas is back. Agree with Dimitar. You should show how many estimates you've embedded in each estimate number. If only 1 to 2, it is not that relevant. Cool. I totally agree with you. I think I just said that, but it's up to you. We present you the data. It's up to you on how you analyze that data. So totally agree with you. Jonas wants to know, are the watch lists dynamically linked to the screener? If one stock no longer meets the screening criteria, will it also disappear from the watch list? That's a great question. So the answer is they're not dynamically linked. And so what happens with the screener here is even the screener is not dynamic. So meaning that if you have, let's say I have the screen for high growth tech stocks, whatever it is, notice that these are tabs, right? These are tabs where I create the screen and I have it. But every time I come back to this and reload, it's going to basically reload the companies that are going to meet that criteria. And our stuff is updated pretty much live. It's not exactly live throughout the day, but so these numbers are going to change. So let's say all of a sudden, MasterCard declares that they had a lot of money in FTX and the stock is down 40%. And I refresh this page. This is no longer going to be part of the screener because this stock is going to be way below 20% in terms of its drawdown. And so it would disappear from the screener. So I would say that the screens here are a way to create a watch list based on some criteria. If you export it to a watch list, then it's sort of fixed in time and it's not linked. So thank you for that question. I hope that's clear. Where do you get projected earnings data from? Sean Gibson wants to know. So Sean, I think I answered that from consensus, Capital IQ numbers. That's our source for financial data and consensus. And great product. Thanks, Sean. Really appreciate that. Is there a way to, Justin wants to know, is there a way to look at growth rates within sectors for sector analysis and changes in favored sentiment? So I'm not sure if you mean, is there a way to look at growth rates for sectors overall, meaning like I want to look at a growth rate for the tech sector. If that's your question, we have no way to do that. However, if you're asking, can I look at the growth rate only for the technology sector, or only for the financial sector, or only for the energy sector, then you can do that. And the way you do that is depending on which kind of screener you look at. So let's say we're looking at the screener and I have this screener high growth tech. I would go to modify criteria. I would go to this criteria here, sector equals information technology. And then I would, set this to, let's say, healthcare instead of information technology. And this would tell me all the stocks that meet this criteria in the healthcare sector or in whatever sector you're looking for. If I'm doing that for, let's say, the market scatter plot that we looked at before, there's two ways to do that. Is one, I could look at the ETF, which represents the sector. So let's say I look at XLV, which is the healthcare ETF. That would give me the healthcare companies the companies in this ETF, which are only healthcare companies. But let's say I'm looking at the S&P 500, and it's kind of like all these companies, and there's a lot of companies here. What I could do is I could actually go up here and look at the sector filter and then filter by sector. So if I go here, sorry, my Zoom bar is in the way, and only have healthcare, then it's going to give me only the healthcare stocks and filter by that sector. So that's how you would look at the sector filter, but there is no way to look at kind of how fast is healthcare growing. Unfortunately, we don't have that data, but it is something that we'll be getting at some point as well. Leo wants to know, is Reuters News still part of the pack? Leo, the Reuters News is not part of the pack. The reason is that Reuters, just long story short, we used to have Reuters News as part of our offering. Basically, our product started competing more aggressively with Refinitiv. Internally, there was some pushback at Reuters about providing Reuters News to Koyfin, which was taking market share, and users were switching from Refinitiv, which is a $2,000 or $1,800 a month product, to Koyfin. And so they unfortunately changed the agreement and increased their prices. And so we no longer have Reuters News. However, we did add MTN News to our news repository. And so you have MTN News, which is the paid news source we offer. And we find that's a pretty good news source for stock news. But the answer is, unfortunately, we do not have Reuters News now in our offering. Hey, Jim, how to go about the investment opportunities? Is there a pitch book? There's no official pitch book, meaning there's not one online. If you email me, I can then provide you with some information. So again, the way the investment works, if you're thinking about investing more than $100,000, email me directly. If it's less, it's going to be part of this structure called the SPV, which is through AngelList. You could also email me and ask me questions in that regard as well. But the link to the SPV is going to be included in the follow-up email. And you will all, if you registered for this webinar, which you have because you're on this webinar, will be part of that follow-up email. So Kenneth says, Rob, great platform, huge fan. Thanks, Kenneth. I think the estimates revision capabilities are a true game changer. Can we screen for stocks that have revisions? Yes, you can. And the way you do that is, again, you would just go to this, go to the screening criteria. Let me just use the existing one I have. So let's say that I want to have my my sector here as my technology sector. And then instead of these, in addition to these criteria, so let's say I want revenues that are growing more than 10%, I had another criteria here. And notice this picker is pretty much the same in all our functions and all our snapshots and all our analytics. So once you get to know this data picker, you'll know where everything is. But our estimate revisions are under analyst estimates, right? You go under analyst estimates, there's estimate revisions here. And then you have to find sort of the what you want to look for. So let's say I want to look for revenue, let's say average revision percent. So I want to look at the average and how much has been revised. And let's say I want to look at FY2, just because it's a little bit year out. I want to look at the 3-month revision. So I'm going to look at this figure, which is FY2E, 3-month revision. I'm going to select it. What that's going to tell me is, hey, this is the range, minus 68% to 479%. And let's say the minimum I want is just anything that's been upgraded more than 10% over the past 3 months, right? That's what I'm looking at, 3 months. And now I have 25 matches. And so these are going to be the stocks that have been upgraded, where over the past 3 months, FY2 estimates have been upgraded by more than 5%. Let's see if we can, let's see if we can sort of check this. So I'm going to look at Gen Digital. I'm going to click on it to open up a new page, just to kind of like show you guys. So this is my Gen Digital. I'm going to go to Analyst Estimates, Estimate Trends. That's where we see the changes. And you could see here that FY2, which is FY 2024, it's the second unreported year. And if you track it here, it sure has been up more than more than 10% over the past 3 months. So I don't know what happened here, whether it's earnings or whatever. Obviously, you need to do the research. the screening tool is just a way to kind of filter a lot of stuff into something that's more manageable. But that's how you would do it is in here, add a criteria and focus on the revision. You're welcome. So, so Sean wants to know, is there a news alert function used on the symbol today? Sean, there's no news alert function. However, please go to our feedback forum. That's been requested several times. So if you go to feedback and you go to feature requests and you search for alerts, alerts are pretty popular. A lot of people want them, but if you upvote it, then we're more likely to do it even sooner. So to the extent you go to this feature forum, you upvote the stuff you like. This is how we decide our roadmap is literally, I go here, I go on features and requests. I sort by top and I look at this and I say, hey, what do people want? How easy it is for us to deliver it and how complicated is it for us to deliver it? And that's kind of how we think about our roadmap. And the next up on the agenda is sort of earnings calendar. And like in this top list, alerts are a little bit harder to do just because it involves a little bit different work. But the next thing we're going to be working on, or one of the next things we'll be working on, is earnings calendar. Insider ownership data requires us to get a new data set, which is complicated and expensive. So unfortunately, we're not going to do that next. Hopefully we'll do that pretty soon, but earnings calendar is going to be the next one that we work for. So to answer your question, no news alerts, but it's on our agenda. Nawaz wants to know, is there a place to look up equity, debt, cost of capital, and WACC? So great question, Nawaz. There's no great way to do it. I believe in the watch list, you can look up the debt. I think there's a field that is the debt cost. Debt coupon. It's always no. I thought there was. So to answer your question, we don't have a WACC number. I thought we had a kind of like a coupon percentage number. Maybe I saw that somewhere else, and I'm just thinking we did. But it's, if you search for coupon or debt percentage, I know this is sometimes pretty annoying to search for. I'm going to say we don't have it, but if I do, I'm going to email you directly with the number and with the series. Dan wants to know, can you screen for ETFs? Dan, you cannot screen for ETFs right now. That's something that's definitely on our roadmap. And hopefully we'll have that out in the first quarter of next year. Jonas wants to know, am I able to set stock price alerts on Koyfin? Am I able to set any other alerts? We don't have an alerting function, sort of goes back to what we said before. So unfortunately, we don't have an alerting function. If you go to the feedback form and please add these details of, hey, not only do I want news alerts, I want alerts on fundamental drivers. That would be super helpful to put in that ticket just so our product team knows that and has that. And if you could do that, Jonas, I would appreciate that very much. Demeter wants to know, your Movember game is strong, Rob. Love Koyfin and thanks for this season. Oh, thanks so much. You should